What's going on? Welcome to another market strip down session. So we're still bullish on the month. Um, if we look at the weekly, a reason why, I don't know if I mentioned it 2 weeks ago, why I think we went bullish this month and why my analysis was bullish 2 weeks ago, and it's still the same analysis up until right now. We'll get more into it. Um, June, monthly candle of June pushed past May's low but closed above it, which opens up the potential for a reversal, which is what we've seen now the last 3 weeks. Now, my MetaTrader, which I use um, outside of doing these market strip down sessions, I use my MetaTrader for all my analysis and videos, or my analysis and trading. Sorry. It closed about 20 pips higher than it did on Trade Locker, which means that it closed bullish above last week's high. It closed outside of last week's high, and the monthly candle probably looks more or less. It probably closed more or less around this area here, and it did close slightly bullish. It closed below this wick, below this level that's just above us there, but it did close above last week's wick, which allows room to the upside. If we go to the daily now, we can see we traded basically inside of Monday's range the entire week. We did push outside of it on Thursday, but then reversed back up. Friday pushed down, was ranging, ended up closing bullish, which I was waiting to see what was going to happen there. It's going to be a really interesting situation. We're either going to have one of two things really happen, and I'm going to draw it in a different color because I still think this overall analysis is correct. Let me just draw it in, and then I'll change the color. Let's go with this. So we're either going to have, come on, a push up to around here. Why do I say that? Because we have structure all through, excuse me, all through there. So on open, we're either going to, let me just adjust these things. Sorry, this is annoying me. We're either going to have a push up and then a push down. And there'll be retracements, and we'll break levels, these previous three levels that we have marked up here, use them as resistance, head down to the next one, break through it, use it as resistance, so on and so forth, all the way down to 2700. 2695-ish. Or we could also just break through this level. Oh yeah. We could also just break through this level and come straight up to here. Obviously with a retracement to this level, we break through it, come back down like we have it drawn in the orange, retrace and end up there. We would need a break of those highs as well. And that need a break of those two levels, which I think would be very simple. This looks like a really clean setup, to be honest with you. Break of this, comes back down, uses this structure and trend line as support, and then continues up. Inversely, we could see a retest of Thursday's low, and then we head up. Overall, I mean, this analysis stays the same because we didn't go anywhere this last week other than ranging. But if I had to guess, I'm going to say the most two probable setups is we either push down, market open, maybe gap down, or push down. Monday we create a low of the week and then continue bullish for the rest of the week. Or we just stay within this area here within Friday's range. Maybe use Friday's low of the day as a support, which is a very probable situation. Sorry, I did it on the higher time frame again. I wasn't paying attention there. We use Friday's Um, we use Fridays. Sorry, my OCD just needs to adjust these things. We use Friday's low of the day as a support, and then continue upwards. All right, that looks a lot better. Yeah, I think that we could use Friday's low of the day as a support as well. Which I'm gonna draw it in here with this. Oops. More or less something like that. Could see Friday's low of the day as a support. And then we push up from Friday's low of the day. Boom. Break above these highs, come back, use them as support. Boom, break above this structure, come back, use it as support, and then eventually head up to the 3,000 area. I mean, we're basically more or less in the center. I'd say on Thursday, we were probably dead center at the low of the week on Thursday. We were probably dead center between these two areas. 1589, almost, about 100 pip difference. We were 100 pips closer to the high than the low. So, I mean, we're closer to the high side now. If we go all the way to the top and all the way to the bottom from where we are right now, we have 1534, 18. So it's probably closer. That's probably dead center from Thursday's low. 1594. No, opposite again. You get the point. We're about in the center of both that high that I have marked out and the all-time high and this low down here. We're pretty close to the center, about 55% give or take on either side. I mean, those are really the only two things that I could see happening. A lot of good trade opportunities. If you go in and you look, there was really good trade opportunities. Maybe we can go over those in a future video, but yeah, I see more potential to the upside, either using Friday's low as the low of the week and then continuing bullish from there, or maybe we push past it and we have the week prior's high right here, which is just basically just past Thursday's low. So maybe we poke past Thursday's low, trigger a bunch of sell orders, and then reverse back up, break out of this range, do a fake break of structure out of the range to the low side, like what happened on Thursday, and then continue up from there. So those are really the two options, either Friday's low or Thursday's low as low of the week, and then continuing up from there. I think if we break below Thursday's low and then we come back up and use this as a resistance, we're definitely just going to head bearish. So, I mean, I think Thursday's low will be the catalyst if it goes down to there. I think Friday's low, there's probably like a 65-70% chance we use Friday's low of the day as Monday's low, use that as support and go up. But if we do go down to Thursday's low, we could poke past it, but always remember it's dependent on candle closes, not wicks. If we go based off of wicks, there's a lot of areas where you'll get faked out and trades close, stop losses hit, whatever the case is, because you're not going based off of structure, right? I mean, over here, if we look, we can see that if you had your stop loss here, even below it, you're going to get stopped out. No candles on the 4-hour close below this structure, and then it reversed back up, right? So it's always, I always go based off of candle closures for gold, at least. Maybe other things you can treat them differently. You would have to go do your own analysis and figure that out yourself. But for me, I go based off of candle closures. So we're looking for either Friday's low of the day to be used, more or less Friday's low of the day. Maybe we poke past that as well. Do a fake break of structure on Friday's low of the day. If you don't know what that is, go into the course and study. That just means that you haven't studied that part of the course, and you need to. Go look at that. We either do a fake break of structure or just straight up use Friday's low as support and structure, or same thing, Thursday we use it low of the day as support and structure, or maybe we have a fake break of structure. But just be aware of how a fake break of structure needs to play out, the candle criteria that needs to happen in a certain order. and don't get caught in trying to predict a fake break of structure and then it drops and then maybe it comes back up, uses it as resistance, and you think, oh, okay, now my trade's valid, now it's going to go up, and then it continues to drop. And you get caught in a trade that you shouldn't be in because you were trying to predict rather than react. So I hope this gives you clarity. I'm wishing you a beautiful, abundant, and blessed week ahead. I hope you're having a beautiful weekend. Whenever you watch this, God bless you. Stay safe, and we'll see you on the next one. Ciao, ciao.